What's up everyone? Welcome back to my channel. Welcome back to a brand new video, guys. I hope you all had a great weekend and I hope you are ready to smash some profits for this week. If you guys like my content, make sure you are subscribed to the channel to not miss out on future uploads. Feel free to also share and like the video. I will really much appreciate it. If you have any questions, make sure to drop them in my comment section down below. And for those that are interested in the strategies I use, trading Forex, trading indices, and trading gold, and also want to join my Signal group, make sure to DM me on Telegram. I will leave you my Telegram link down below. And yeah, guys, let's just jump straight into the video. Today, I'm going to talk with you about a topic that I saw that nobody really made videos about because most people assume that those that want to trade Forex have time, have free time, have a lot of hours per day to trade. But in the same time, I have a lot of people that I talk with that still have full-time jobs, but in the same time, they want to trade as well, but they don't really have those 2, 3, 4 hours per day to fully stay on the charts and scalp or day trade and do all that stuff. So this video is for you guys, for those people that have full-time jobs but still want to trade in the same time to make an income, to make a passive income for then in the future to fully switch on and fully focus on trading Forex. But till then, you have to make that consistent income, and in the same time, you have to work at your full-time job, which is pretty hard. Okay, so this strategy is for you guys. I'm gonna show you a simple strategy that you can use when you have a full-time job and when you don't have those 2, 3, 4 hours per day to scalp, to day trade, and do all that stuff, because time is necessary when trading Forex, as every single asset. If you want to be a great, I don't know, soccer player or great football player, you have to put in the time, the work, hours per day, 4 or 5 hours per day. The same goes with Forex. But there's also an alternative for trading Forex, which is swing trading. And I really suggest you guys that have a full-time job to start swing trading, because it is very hard to day trade or scalp if you don't have at least maybe 2 or 3 hours per day to trade. Okay, so a easy swing trading strategy will be on the daily time frame, because when you have a less time to trade, you have to go on those bigger time frames instead of trading on the M5 or M15 or M30 or M1, scalping and doing all that crazy stuff. Instead, you can go on the daily time frame, establish some key zones. I'm gonna use Euro USD as my example. So we have a key zone right here on the daily time frame that we can see Euro USD is approaching and rejected off of. We can see that Euro USD is in a downtrend since April of 2021. So we can draw a trend line to mark that we are in a downtrend. The way I like to draw a trend line is actually have two trend lines like this, like a channel, so to say. So you can see market was creating lower highs, lower low, lower highs, lower low, lower highs, lower low, tested the previous lower high to then create a new lower low. So this zone right here is a also very important zone. And after you do these markups, you then want to look for entries. So the way you can look for entries is either on the daily if you want to be more comfortable, or you can drop a time frame and go to the H4. Remember, this is swing trading. These setups will take a lot of time to form, between days, weeks, even sometimes month. But if you do this with every single pair, then you'll be able to get some good setups every single month, and compound your account and grow it to whatever amount you want. So let's take this example right here. Okay, so for this strategy, you want to use market structure on the daily time frame. This is very important. So we can mark this as our previous lower high right here. This is our lower high. I will draw it right here, LH. Then we created a lower low right there. Where's my text? Here we created a lower low. We are creating bearish market structure. And then we can see that market came back to our previous lower high, retested it. It actually threw us a doji as well. And you could easily, we also had a trend line touch, trend line confluence, and the last confluence are, we can see that our oscillator, on the daily, we don't really have a confluence, but we'll drop a time frame on the H4, and we will see that we do have a confluence on our trusted signal oscillator. For those that have the indicator, you guys can use it. It is really helpful. For those that don't and still want to check out trusted signals, I will leave their link down in my video description as well, so feel free to check them out. And what we can see here is that we can see that on the trusted signal oscillator, we had a hidden bearish divergence right here and right here as well. So these were some good confluences for us to get into a sell. But as I said, if you want to be more comfortable, you can sit on the daily, wait for some candlestick patterns on the daily, like we had this doji here, the trend line confluence as well, and you could have entered a sell right there. You could have entered a short position right after this doji right here. You could have placed your stop loss above the lower high. And then for your take profit, you would have aimed for the next zone, which was this one right here, and your take profit would have been hit. This would have been a 1 to 6 risk to reward. But as you can see, it took a lot of days for it to take profit. So we entered on 10th of February and it hit TP on 7th of March. So almost 1 month. Okay, so this is why I'm saying that this is swing trading. If you have no time to trade, to scalp, to day trade, this is a strategy for you that you can use. You enter it and then you place your stop loss, your take profit, and then you just let that trade run. And as I said, it can take a couple of weeks, but if you do this on all the main pairs, let's say, you will be able to get around 5 to 6 setups every single month. And yeah, like these setups are really good. Like imagine this is a 1 to 7 almost. Imagine you have a, I don't know, let's say you have a $5,000 account, okay? And you would have risked 1%, you would have risked $50. And out of this trade, you would have made $300, okay? Or $350. So this is good money, okay? In a single month, you're doing this on, let's say, 5 pairs. Multiply, let's say, $300 with 5. That's 1.5K per month using this strategy of finding setups on the higher time frames without you having to look for scalps every single day, every single hour. You just place the trade and let it run till it hits your target. You can also move the stop loss at break even once it's 1-to-1 in profit. You can do that to secure the profits. And yeah, like this really is a easy strategy that you can do if you have a small amount of time to trade, and if you have a full-time job, you can do these analysis during the weekends. You can then place buy limits or sell limits depending on your analysis. So yeah, like this is really a easy strategy you guys can use, and you have to keep in mind that you need to use a daily time frame for market structure to see where the market is going, to see if it's in a downtrend or bear trend. Now we can or bullish trend. Now we can see that we are in a bear trend on Euro USD till this lower high gets broken. If this lower high gets broken, then we could start see some bullish momentum form on Euro USD. But till then, we are in a bear trend. So the second entry you could have took, it would have been on the H4. This would have been more advanced, but the entry would have been a little bit more better too. So on the H4, you could have entered right here, right on this doji candle right here. You would have seen this doji form. You would have also saw that the oscillator is overbought. We had a previous hidden bearish divergence, and we also have our trend line confluence. So you could have entered here after this doji. This would have been more of a refined entry using the H4, you would have placed your stop loss right above the zone, almost stopped out with this wick. And then the same thing, you would have aimed for this low right here, but instead of a 1 to 7, you would have achieved a 1 to 16 because you refined your entry the um on the on the H4 time frame, and therefore you got a bigger reward. So a 1 to 16 trade is really good. Like imagine you're risking $100 per trade on this trade. You have a 10K account, you risk 1%, you risk $100. You would have made $1,600 off of one single trade. That of course took time to play out, but as I said, if you do this with, I don't know, maybe 3 4 pairs, then that's 4 or 5K a month. You know, if you use this risk management, you use risking 1% per trade, depending on your account size. And yeah, like this is pretty much the strategy I wanted to show you guys. For the people that have full-time jobs but still want to trade and want to find a easy way to trade, here it is. If you guys don't have the trusted signal oscillator, instead of that you can use the RSI, and as confluences for the RSI you can look for price to be overbought or oversold or creating divergences. It's pretty much the same as the oscillator, but I like to use the oscillator because it's a little bit easier to read. And yeah, like as I said, the first thing you want to do, you want to go on the daily, establish the trend. We can see Euro USD is in a downtrend, creating lower highs and lower lows for the past months. Then create some area of interest, mark some area of interest. We can see this is a big area of interest that Euro USD is approaching, and it also rejected off of. Then determine the previous market structure. We had a lower high, lower low, lower high, lower low. And here where you would have saw that you would have created a lower low, then price pull back to the previous lower high. You could have either waited for a entry confluence on the daily and enter right here, or you could have went on the H4 for a refined entry and enter right there, your stop loss above the zone, and take profit at the next area of interest. So it is a pretty simple strategy. The same goes for buy setups. It is really easy. You just have to look for market structure, areas of interests, and confluences, because confluences are very important for your entries, because you cannot enter if you don't have a bearish candlestick pattern. For sell setups, also a confluence on your RSI or oscillator if you have the oscillator. And if all those conditions are met, then you can take the trade, aim for the next area of interest, place your stop loss accordingly, and just let that trade run without you having to stress over it. And yeah, guys, this is pretty much the strategy. As I said, if you have any questions, make sure to drop them in the comment section down below. If you want to learn the strategies I use for scalping, day trading, and also swing trading, make sure to DM me on Telegram. Also, if you want to join my Signal group, do the same thing. I will leave you my Telegram link down in the video description. And yeah, guys, this was pretty much the video. I hope y'all enjoyed it. If you did, make sure you're subscribed to the channel to not miss out on any of my future uploads. And I will see you all in the next episode. Goodbye.